Page number 221.
Yeah.
With me.
Mm-hmm.
So over here, I'll go and see directly the question. It is a past paper question which year of October,
Mm-hmm.
November 21, paper 31. Okay.
Mm-hmm.
What have they asked me to prepare?
Asking me to prepare. Right.
A purchase budget.
Yeah.
For purchase budget, what do you have to keep in mind?
For purchase budget, you have to keep in mind. Yeah.
Okay. So they have to prepare, I have to prepare a purchase budget in dollars
Mm-hmm.
for February, March, and April. To make the purchase budget, what is the first thing that I need to have?
The purchase budget, the first thing you need to have is the
Production budget.
production budget. Yeah.
If you have to make the purchase budget, the first thing that you need to have in mind is either the production budget or you need to have what? The number of units produced.
Mm-hmm.
Okay?
Okay.
Fine.
Okay.
Let's see. Do you have the number of units produced?
Number of units produced. Yeah.
When you are making any budget, na, 1 month before and 1 month after, you always calculate. So you have to make for Feb, March, April.
Mm-hmm.
So 1 month before and 1 month after, always do.
Mm-hmm.
Okay, now let's read the detail. What are they telling me? I have to make the purchase budget. I already have the number of units produced. Yes?
Mm-hmm. Yeah.
Purchase budget, that means I am concerned with direct materials.
Mm-hmm.
Okay. The direct material cost is paid in the month that is following purchase. That means the month that you purchase, you don't pay in that month. You pay in the next month.
Mm-hmm.
Are you with me?
Yeah.
All other details is required for cash budget.
Mm-hmm.
But because I want to make purchase budget, I will only first focus on the material. Okay. Now, what is the policy of the company?
Policy of the company is to maintain an inventory of direct materials equal to 1/4 of the quantity in the coming month.
Okay. So if I have to purchase something in February, okay, what is the policy? My closing inventory should be what?
Closing inventory should be equal to 1/4 of the quantity needed.
Is equal to 1/4 of the production needed in the coming month.
Yeah.
Of the production needed in coming month. Coming month means what?
Following, like next month.
Coming month means next month. And since it is for the purchase, so I will multiply with Q and P, the direct material cost. Yes?
Yeah.
If closing inventory is the production needed in the coming month, so opening inventory will be what?
Opening inventory
will be quarter of the QP of production in current month. This you should remember. This is a hint. If closing inventory is quarter of the coming month,
yeah.
so opening
Opening
inventory will
will
be the
be
production of the current
month. Okay.
Okay. If closing inventory is production of the next month, so opening inventory will be production of the current month. And because we are concerned with the purchase budget, so it will just not units, it will be into Q into P. Into Q into P is giving you what? The direct material costs. Are you with me? Are you with me?
Yeah.
Okay, fine. Now let's talk about this. February. What is the number of units produced?
February, the number of units produced is 130.
130 into what?
130 into it will be the production needed in coming month. No, QP.
8, no, this is the product.
Into QP, yeah. So
QP.
8, yeah. So
130
quantity
into 8 into 5.
into 5, yeah.
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 So I will just take this production units for the month so that it becomes a bit easier for us now.
Mm.
Okay, fine. So for Jan, we want for February.
Mm.
So the production, it will be UQP.
Mm.
Per unit requires 8 meters. This is Q and price
Yeah.
is $5 per meter.
Mm.
Okay. So come on, UQP. Tell me for Feb, March, April.
130 into 8 into 5.
For March, it will be 148 into 8 into 5.
Yeah.
And for April, it will be 159 into 8 into 5. What is the amount coming up to?
Mm. And
5,200
yeah.
for March.
Mm-hmm.
Tell me for April.
920.
Sorry.
920.
Okay. That is for March. What is for April?
April 6360.
6360.
Mm.
Okay, fine. Then you will add the closing inventory.
Yeah.
Okay. Closing inventory is what?
Mm.
1 quarter.
Mm-hmm.
Quantity needed in the coming month. That
Mm.
means production of coming month.
Oh.
Next month.
Mm.
Yes.
Yeah.
Into Q into P.
Mm.
Okay. This is for closing.
Yeah.
Come on. Give me the closing for March.
5920 into 8 into 5 divided by 4.
No, 5920 is already it is
Oh,
already done now.
oh,
Multiplication is
sorry.
done na into Q.
So, okay. So, yeah, we'll do 5920 divided by 4.
Yes, very good. It will be 5920 divided by
1480.
4. This will be
1480. 1480. For April, for March, it will be 6360 divided by 4.
6360 divided by 4.
1590.
And for
1590.
May it will be how much? 159 into 8 into 5.
159 into 5, yeah.
So it is how much?
It is 6360.
No.
Miss,
Hmm.
for May, won't we take 138 into 8 into 5?
Okay, 138.
Yeah. You get
138 into 8 into 5.
5520 divided by 4. You get 1380.
So 5520 divided by 4 is 138.
Yeah.
So you got this. This will be how much?
Mm,
1480.
it'll be 6680.
Hmm?
6680.
634.
For
6360 divided by 4 is how much?
no, like I'm adding it.
No. Give me first the closing inventory.
1480, 1590, 1380.
1380. Now add and give.
6680.
Hmm?
7510.
Hmm.
7740.
Minus opening inventory. If closing inventory is
Hmm.
1/4 of the next month,
Yeah.
so opening inventory will be 1/4 of the
Current month.
current month. Current
So
month you already
5,200
highlighted.
divided, 5,200 divided by 4,
Hmm.
1,300.
Hmm. For March
On March it will be 5,920 divided by 4, we get 1,480.
and for April.
April, you get 1,590.
So you will get your purchase budget.
5,380,
Hmm.
6,030,
Hmm.
and 6,5150.
6 months.
6,150. Yeah, 6,150.
Now you have to prepare your cash budget.
Hmm.
Okay. Now for
Yeah,
cash budget, first you do your receipts,
yeah, then you
then
do
you do
payment.
your payment. That means you have to see when are you going to receive for the sales, when are
Hmm.
you going to make the payments of what.
Hmm.
Okay. So I will take all this information down and
Hmm.
we will crop the information that is needed and what is not needed. Are you with me?
Hmm. Yeah.
Okay. For the cash budget, first you will take your receipts.
Hmm.
First thing you will take what?
Receipts.
Receipts. Okay, fine.
Hmm.
See what is the policy for receiving money. Where is the policy for receiving money? Is it here? No.
No.
Is it here? This is material labor overheads. Okay. This was related to purchases.
Yeah.
This was related to purchase, opening
Hmm.
and closing inventory.
Hmm.
Yes. Now this
Yeah.
is related to something about machinery, but first thing I want sales.
Hmm.
This is other running costs. This is expense. This is I'm getting sales. Are you with me?
Hmm. Yeah.
Selling price is expected to be $200 per unit.
Hmm.
Okay. And I have the sales over here. Are you with me?
Yeah.
25% of the sales are cash sales and 75% are credit sales.
Hmm.
That means if I am in March and if I am in April,
Hmm.
whatever is the number of units sold, in this
Yeah.
25% I am going to receive immediately.
Hmm.
Yes.
Yeah.
So come on, I will first write what is my cash sale. 150 is the unit of March.
Hmm.
What is the selling price?
Selling price is 200 per unit.
And I am going to receive how much of it immediately?
25%.
So it will come up to how much?
150 to 200 into 25%. You get 7,500.
Into 25%. Okay. And for April, it will be how much? 160 into 200 into
Yeah.
25%.
8,000.
I'm going to get 8,000.
Hmm.
Now, this is related to cash sales done.
Hmm.
How are the credit customers paying me? Credit
Hmm.
customers pay in full in the
Hmm.
month after sales.
Hmm.
So, for the March
So
sales,
for March, it will come in April.
it will come in April. So,
Yeah.
150 into 200 into
Hmm.
75%.
75. Yeah. You get 22,500.
I'll write the calculation over here.
Yeah.
150 into 200 into 75%.
Yeah.
And in the month of March, I will receive money for February sales.
Yeah.
So it will be 130 into 200,
130 into 200 into 25%.
75%.
Oh,
75.
70, 75. Oh, 19,500.
19,500.
Mm-hmm.
So we are done with the cash sales of the current month, and I receive what? Credit sales.
Yeah.
Of the previous month. I received food over here. So this point is done. Are you with me? Now wait. Look over here. This point is also done. Now let's see. The directors are planning to replace a big amount of machinery in April. The new machinery will cost 13,000. That means in April, I am going to buy a machinery which will cost me how much?
It will cost you 13,000. Yeah.
And the sale proceeds of the old machinery is expected to be 2,000. So I am going to receive money on disposal of machinery.
Yeah.
How much?
Machinery you're receiving.
Read properly.
Yeah.
I am going to receive something and I'm going to pay something.
Yeah.
Read. What will I receive and what will I pay?
You will receive 2,000.
And what you're going to pay?
We're going to pay 13,000.
In the month of?
In the month of April.
Oh, fine. So go in the month of April. You're going to sell the machinery. It will be sale of machinery. How much?
2,000.
And you're not.
This is it in April? Okay.
So what is the total of your receipts?
27,000 for March. 32,500 for April.
I've done with my receipts. Now I have to proceed with payments. Yes?
Yeah.
In the payments, I don't need this closing inventory part. So I will just crop it. I have already calculated some things in my purchase budget.
Yeah.
My purchase cost. How much is the purchase cost? Purchases cost.
Here's 13,000.
Now, whatever it is paid in the month following purchases.
Yeah.
When it is paid?
The month following purchase.
In the month following purchases. Come on. I have calculated my purchase budget. Over here. February purchases I will pay in?
February purchase you'll pay in March.
February purchases I will pay in March. Pay in March. And March purchases I will pay in?
April.
That means this I will pay in March. And this I will pay in April.
Yeah.
So when I have payments, 5380 will be paid in?
5380 will be paid in Jan.
In the month. I have purchased this in Feb.
Yeah.
And they are saying
it'll be paid in March.
The following month.
Yeah, it'll be paid in March. 5380 will be paid in March.
So 5380 will be paid in?
March.
March. This is for purchase. What will be paid in April?
April 6030.
6030. Done?
Yeah.
Now you're also going to pay for labor. Right?
Yeah.
Let's see. We're going to pay for labor now. How we are going to pay? We pay normally $80. What do we pay normally? How much do we pay?
$80.
$80. It is paid in the month of working. So whichever month you're working, you're going to pay $80. Are you with me?
Yeah.
When more than 140 units are produced in any month, An overtime premium will be paid amounting to extra $10 for each unit in excess of 140. So if I produce in any month more than 140, so every extra unit that I am producing, I will pay extra $10.
Yeah. So for March it is 8. So you'll
For
do.
March it is 8 extra,
Yeah.
and for
Yeah.
April
So
it
we'll.
is 19 extra.
Mhm.
Okay.
So we'll
And
do
normally how much I am paying them?
80. So we'll do 80 plus 8 into 10.
No. So for 140 I have to pay, and for
Yeah.
8 units I have to pay.
Yeah.
Okay. So normally I am paying them how much? Labor, the
80.
basic labor.
Yeah.
80 for how many units?
140.
So basic labor will be how much?
112,000.
80 into 140.
Yeah. Oh, 18 to 148. No, that's
Because
wrong.
that is the normal per unit I am paying them 80.
No, but you have to pay them
Listen.
excess 10.
Then this extra 8 that I have made, now for that I will pay them extra 10.
Okay.
Okay. So
Okay.
80 I am paying my normal wage. Okay.
So you get
This is
11840.
11,840. And what is the extra units that they have made?
Extra units they have made is 8.
8. So for the overtime,
You get 80.
so you will get 8 into
10.
8 into 10.
10. You get 80.
80. Come on over here. You are going to pay them 80 into
80 into 159. No, 80 into 1, yeah, 159. You get what, 12,720.
and what is the extra units? 19
19.
extra units.
So
I'm
yeah,
going to
so you
pay
get
them 10.
190. Yeah, so 190.
190. Add. No need to add. Let it. So material is done. Labor is done.
Yeah.
Now let's go to variable overheads. How much you going to pay for variable overheads? Paid in the month of production.
Yeah.
So I'm going to pay them 25,
25 into 148.
and here it will be 25 into
3,000.
159.
Yeah.
How much?
3,700. 3,700 for March and 3,975 for April.
Then I'm going to buy
Yeah.
the machinery.
Yeah. So cost is 13,000 in April.
Other running costs. How much?
Paid monthly. So we'll put 3,800.
Now add all the costs.
Yeah. 24,800.
And for April,
3,9715.
so this is number 1 and this is number 2. You have your receipts, you have your
Payments.
expenses. Now what is the net cash with you? You're making the cash budget, okay?
Yeah.
Are you getting this?
Yeah.
Okay. Then you have your balance on bank account 1,700.
Yeah.
Okay. This is your
Mm.
balance on bank account on 1st March
Mm.
2022. So you
Yeah.
have some balance brought forward. Yeah, opening
Mm.
balance.
Mm.
How much it is?
It is 1,700.
So you will get your closing balance. What is your closing balance?
Closing balance is
3,900.
3,900.
Closing of March will become opening of
Opening of April.
April. So what is your closing balance of cash? Bank
3,900.
3315 negative.
Yeah.
Are you with me?
Yeah.
So this is how you make your cash budget. It is
Mm.
receipts minus the payment.
Yeah.
Then you get your net cash, add opening, you will get the closing.
Mm.
Closing of one becomes the opening of the other.
Yeah.
Now the next question is, comment on the suitability of the month of April for replacement of machinery.
Mm-hmm.
What is the suitability in the month of April for replacing
Mm-hmm.
machinery? Month of April, you have negative cash balance.
Yeah.
Okay. Let's see the
Mm-hmm.
production in the month of April. In the month of April, you're producing the maximum number of units.
Mm-hmm.
Okay. So therefore, if you're producing the maximum number of units,
Mm-hmm.
so here, if you buy a new machinery, you're going to disturb the production process because you're selling one and buying one.
Mm-hmm.
Okay. Apart from that, in the month of April, you don't have
Yeah.
enough funds also.
Mm.
Okay. The funds were not available to pay for the new machinery.
Mm-hmm.
Then you had to overdraw this money of 3315 from the bank.
Yeah.
Okay. If I continue with this position in the future, maybe in future I may have a cash deficit.
Mm-hmm.
Okay. So
Mm.
April is not the apt month in which you can install the machinery. You should have done it in some other month.
March. Yeah.
Okay. So you have to write the suitability of the month of April to replace the machinery.
Mm.
Alternatively, you can also write that replacing the machinery in the month of April was better because you had to purchase, you had to produce a number of units.
Mm-hmm.
Are you with me?
Yeah.
Okay, come on. Tell me what will you write?
We will write that we should have replaced. If you put the machinery in April,
First,
you
you
will
will
get.
talk about the production.
Mm.
Then you will talk about the cash.
Mm.
Then you will talk about the suitability.
Mm.
Come on, tell me.
April has the highest number of production,
Hmm.
and that means that it could lead to machine breaking down,
Hmm.
and there won't be enough funds to pay for the machinery in April, so that we could go into overdraft, or we might have to
We
borrow.
we have already gone into overdraft. We
Mm.
already purchased, right, in the month of
Yeah.
April. So
Yeah.
we are already in that overdraft situation.
Mm. Mm.
Yeah.
Yeah.
Then what else?
Mm. Then
Maybe in future we may have a cash surplus,
surplus. Yeah.
which would put us in a situation where we would not need to overdraw.
Mm.
And maybe April is the only month where you need more production, so you could get the machinery and install it. You can write in your
Mm.
own words.
Okay.
Okay. Now give me
Yeah.
this one. Read this question and tell me what is this question telling you.
Mm. Advise the director whether they should limit 140. The company, if they reduce the production, it will reduce the sales, the possible sales.
First, explain me the question, dear.
They're asking if what will be the
One
what will
of
be
the
the this.
directors has suggested that you should limit your production to 140 units every month
Yeah.
so that you don't have to pay overtime premium.
Yeah.
Advise the directors whether they should limit this production or not.
Hmm.
10.
If they limit the production, when it exceeds 140, all those sales will be lost. So this could
Let's
reduce the
see the number of
profits.
units sold. The number of units that you're selling is only more in the month of March.
Yeah.
Okay. Here you are
And April
selling
also.
20, here you are
April
selling
also.
30.
Hmm.
So it manages over here.
And even in April.
It will be managed over here also. Because
Yeah.
30 units you saved here, 30 units you sold extra.
Yeah.
Here it is tallying and here this. So
Hmm.
you can restrict the production and still manage the level of sales, is it?
Yeah.
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 If production was restricted, then inventory at the end of April would be
Would be strict. Would be less.
6 rather than 33. Let's check.
Yeah.
You just have to make your own answer. If you restrict the production, then over here your closing inventory is 33.
Yeah.
So if you restrict the production, how much would the closing inventory reach up to?
8 to 6.
If this was 140,
Yeah.
okay, your production is 140.
Yeah.
Your closing inventory is 36.
Yeah. We'll.
Production
Hello.
is 140.
Yeah.
140. 140. Okay, you don't need to show so much of calculation, it's just for 3 marks.
Hmm.
Okay. So if you restrict the inventory, you can still match up the sales.
Yeah.
Okay. But there is a risk of shortage of finished goods
Hmm.
in case there is an excess demand.
Yeah.
In case the raw material get expensive, or if
Mm-hmm.
the labor is not available,
Yeah.
the overtime you're paying is very small in relation to the whole labor cost,
Mm.
which is immaterial.
Yeah.
So they should not limit the production to 140 units.
Mm-hmm.
You have to
Yeah.
give your advice.
Okay.
Okay. I